Hello, I'm Amy Beecham, Communications Director for Krause Financial Services. Welcome to Episode 5 of our Industry Insights series. In this series, we aim to discuss news, updates, and hot discussion topics that affect the elder law space and that are relevant to you as an elder law attorney. Working on hundreds of cases per month and working with attorneys from across the country, we see trends that affect elder law planning, and we want to share some of those insights with you today. Today we have one of our benefits planners, Alex Thompson. Alex has been with Krause for over 3 years now and has worked on hundreds of crisis Medicaid planning cases. Recently, we've been receiving a lot of questions on how using an IRA to fund a Medicaid compliant annuity can benefit your clients, as well as the logistics that play a part in the process. Today, Alex is going to share some of his insights with us. Welcome, Alex.
Hi, how's it going, Amy?
Good, how are you?
Good.
Good. So why might an attorney consider using an IRA to fund a Medicaid compliant annuity?
So in a lot of states, the IRA is going to be kind of a resource. So the only way to properly spend their client down is going to be to either cash it out and get a huge tax hit,
Sure.
or they can convert that tax qualified account into a tax qualified Medicaid compliant annuity. And then from there, instead of facing the giant tax burden, the funds are then taxed as they make payments.
Okay. And as a side note for our viewers, if you're not sure if an IRA is countable in your state, we do have all of those resources available on our state pages in your attorney access account. If you don't have an account, you can sign up. It's quick, easy, and free at medicaidannuity.com. Okay, back to what we were talking about. Funding a Medicaid compliant annuity with an IRA is a great option to avoid those immediate tax consequences. So how can we move the funds to the Medicaid compliant annuity without incurring any consequences?
So they're essentially going to have two options. They're either going to be able to do a trustee-to-trustee transfer or the 60-day rollover.
Okay.
So the trustee-to-trustee transfer, client is essentially going to be doing some additional paperwork. That allows the MCA company to request the funds on the client's behalf.
Okay.
And then the other option being the 60-day rollover. So on that option, the client's going to have to contact the custodian company and request a liquidation of that account without having taxes withheld. Now, the key point to remember on the 60-day rollover is there's only one that's allowed per year.
Okay. So it sounds like with the trustee-to-trustee transfer, it's really the two companies, like the IRA custodian company and the insurance company, that are working together to move those funds, whereas with the 60-day rollover, the client has to be the one to initiate that transaction.
Yeah.
Okay.
Yeah, the main difference between the two is in one situation, the client's never seen the funds hit their bank account.
Okay.
And the other option is the trustee-to-trustee transfer. They're going directly between custodian company and annuity company.
Okay. From my perspective, that makes the trustee-to-trustee transfer sound a little more favorable, a little easier on the client. And then you also mentioned that with the 60-day rollover, there's a 1 per year rule. Can you explain that a little bit?
Yeah, so it's not 1 per calendar year. It's
Okay.
1 per 365 days. And that also pertains to the number of accounts they have, too. So they can only do one.
1 per taxpayer?
Yeah, 1 per taxpayer. So.
Okay. So you can't, do a rollover in December 2019 and then do one again in January 2020.
No.
Okay. And then with, we only have the option of doing 1 per taxpayer. If they have multiple accounts, they could do 1 rollover and then multiple transfers. Would you recommend that? Or would you recommend just going with all transfers?
Yeah, if there's multiple accounts, obviously I think from a cleanliness standpoint, the trustee-to-trustee transfer is definitely going to make the most sense, and it's end up being less in the long run for the client to worry about.
Okay. Now, when dealing with IRAs and taxable income and all that good stuff, I'm sure we get a lot of questions come tax season. Can you explain that a little bit?
Yeah, so first and foremost, anytime we're dealing with tax qualified funds, heavily recommend that the client works with a tax professional or a CPA, just because it is a very complex nature or complex business. So the main thing to remember too is when dealing with a 60-day rollover, they are going to be sent a 1099-R that's going to show the distributions and the taxable amount. They're going to have to report the rollover, and then the custodian company mid-April is going to send a 5498 to the IRS and also to the client that's going to show the contribution. As long as the contribution matches the distribution from the 5498 to the 1099-R, there's no taxable event.
Okay, so that does sound a little complicated with the 60-day rollover. It sounds like they're going to have to do some additional paperwork and might have some additional work on them, come tax season. Now with the trustee-to-trustee transfer, do we have to do that same process?
No, it's pretty much business as usual. With the trustee-to-trustee transfer, it pretty much takes out all of the work out of the client's hands because the custodian companies are the ones that have handled it. So that's definitely going to ease things up a little bit for them. So
Sure. Okay, so from a ease standpoint, this would be another reason why maybe the trustee-to-trustee transfer is a little more favorable.
Yeah.
Assuming timing isn't a factor for the client, I can understand that if they're trying to go really fast through this process and they only have one account, that they might want to favor a 60-day rollover.
Yeah, every situation is going to be unique. The one thing to factor, though, with all these options is that, as you said, the timing standpoint. So trustee-to-trustee transfer typically takes between 4 to 6 weeks, whereas a 60-day rollover, once the client requests those funds, it typically is only about 5 to 7 business days. So whenever there's a time factor that's involved and we're on a time crunch, probably always going to recommend doing a 60-day rollover. Whenever we have the luxury of time, obviously the trustee-to-trustee transfer is going to be the way to go.
Sure.
It's going to be a lot smoother process come tax season for the client.
Okay. Now, any other tips or advice you have for attorneys looking to use this strategy?
So again, going to highly recommend that the client works with a tax professional or CPA. The other factor when considering the transfers is typically there's going to be a financial advisor that's involved.
Okay, sure.
They're not typically too keen on having those funds leave their account, so I would just heavily stress the importance of everything being done in a timely manner, and also that this is for Medicaid purposes. Just because it does. If you're looking at a client spending, $5,000 to $8,000, $10,000 per month in facility costs, I think it's pretty easy to understand why they'd want to be getting those
Sure.
benefits.
Yeah, it's the matter of explaining the economic crisis the client really is in. It goes beyond making sure the client has a sound investment. It's really about that Medicaid eligibility by that point.
It's crisis planning. It's not an investment tool. So that's the key thing to stress on and when just making that determination.
Okay, great. Well, that was very helpful. Thank you very much for your time.
Yeah, you're welcome.
For more information on how a Medicaid compliant annuity can help your client and how to deal with an IRA in these cases, be sure to contact our office. If you have any other questions on how Krause can help you in your practice, just give us a call at 855-552-5893. I'm Amy Beecham, and thanks for watching.